Good morning, everyone. I'd like to call this meeting to order. Laura, it's your meeting, your last one, by the way.
Thank you. Good morning. Yes, thank you. We are delighted today to have the auditors from Cherry Beckert, who will be preparing a presentation for us based on the September 30 fiscal 23 audit. The Finance Committee serves as the audit committee, so to speak, and so they have certain required communications that they need to provide to the committee. They will also return in March for the board meeting. They will have a shorter version of this presentation to present to the board, full board, but I'll turn it over to Lauren Strope. She's the partner with Cherry Beckert.
Hi, good morning, everyone. Thank you so much for having us here today. As Laura said, we're going to kind of walk you through the nature, the timing, and the extent of the audit procedures that we have performed. And I do want to remind you that the financial statements are yours or those charged with governance. They're not ours. So if at any time you have any questions, please don't hesitate to interrupt me. I promise I'm a better auditor than I am a presenter. So sometimes I tend to talk fast, so you can slow me down at any time. All right, this is our agenda and just some of the items that we're going to kind of go through today. And again, just feel free to interrupt if you have any questions along the way. All right, so this is our client service team. As Laura mentioned, my name is Lauren Strope, and I had the pleasure of serving as your audit partner again this year. We have Scott Anderson, who is a second reviewer. He does what's called a cold review. So after we've completed all of our audit procedures, he does a review and focusing on the financial statements. Scott actually did a rotation with the GASB or the standard setters. So it's really nice that we have him on our team and reviewing our ACFR for us. We also have Dewana Coleman. She is a senior manager and has been working on the job for the last several years. And we had TK and Juan really helping us with the boots on the ground. All right, so the big slide and the one that everyone really likes to hear, the results of our audit. So we have audited the financial statements for the year ended September 30th, 2023, and we are ready to render our opinion after the board's approval of the issuance of the financial statement. We plan to issue an unmodified opinion on your financial statement. Used to be unqualified, but basically it's a clean opinion, and it's the highest level of assurance that we as the external auditor can provide to you related to your financial statements. So it's the only type of audit that you want. In order to complete your audit, we actually have to follow quite a few different auditing standards, including the generally accepted auditing standards. We also have to follow government auditing standards, and we are prepared to render a no comment letter as it relates to that. The government auditing standards do require us to kind of take a deep dive into internal controls as it relates to your financial statements. And if we were to note a significant deficiency or a material weakness in those internal controls, that letter would have that comment in there. So that's why the no comment letter is the clean one or the one that you want. We also have a no comment letter under Chapter 10.550 Rules of the Auditor General of the State of Florida. And again, that means that it's clean or there's nothing to comment on. And then finally, an unmodified opinion on your compliance with investment policies here in the state of Florida. And again, that's the highest level of assurance or a clean opinion. So all around good opinions and no comments. We did want to mention that JWB did receive the GFOA Certificate of Excellence for the 2022 ACFR submission, and that's the fourth year in a row that they got it. What an ACFR has in addition to the financial statements, as you can see up there, is it does require that introductory section and that statistical section and prescribes a lot of the material as far as what will be in those sections. So again, JWB received this 4 years in a row, and they are hopeful that they will receive it again when they do their 2023 submission. All right, our professional standards do require that we talk to you about corrected misstatements and uncorrected misstatements. And that's a situation where after the financial statements or the trial balance is complete and provided to us, we as the auditor say, hey, this is an entry that needs to be made in order to bring these fully in accordance with GAAP. So we are pleased to report that we did not have any corrected misstatements. we did have one uncorrected misstatement, so this means that it's the exact same situation, but it's not going to be posted this year. And this one related to the payment of the Sabita liability. Now, Sabita is a fun one. That's subscription-based IT arrangements, and basically any of those long-term type of arrangements that you have. Before, they were just expensed every year. And what GASB 96 required JWB to do was to evaluate those and to bring those on the books with an offsetting liability. So as such, instead of booking this to prepaid, it should have gone to offset the liability. As there was only going to be a $1,148 impact to net position overall, management made the determination to make this entry in an upcoming year. Any questions on that? I know that that can be somewhat confusing, especially since it's a new standard this year. Okay, perfect. All right, I'm going to let Dewana take over and kind of go through the qualitative aspects of accounting practices. Yeah, it's forward.
Hi everyone, as Lauren discussed earlier, we implemented GASB number 96 this year, which is our subscription-based IT arrangement. So like she said, all those long-term contracts, let's say if we for Adobe, if we analyze we analyze all of our subscription arrangements, whether it be from Adobe, Outlook, all those things to see if they were applicable under the standard, and you will see those items as a subscription-based IT. You'll see it as a right-of-use asset on your balance sheet, and you'll see associated liability, and then that will be amortized over the useful life of the contract. We noted no inappropriate accounting policies or practices. Sorry. And of course, as during our audit, we want to make sure that we are aware of all related parties and they're appropriately disclosed within your financial statements. And we noted no new related parties. All related parties are ones that we're familiar with and properly disclosed, and there was no undue relationships with those related parties. We have to talk about any significant or unusual transactions. I just want to say, just because a transaction may be significant or unusual doesn't mean that there is something that was done wrong, or doesn't mean it's an indication of fraud. For instance, an example of something that would be significant and unusual is, say, if we were to issue debt. That is not something that necessarily is fraudulent or wrong. It's just something that would be significant or unusual for this organization. And we noted no significant or unusual transactions that happened during the year. Everything was like our normal course of business and implementation of the standards. Nothing significant there. And of course, as part of our audit standards, we have to review management's estimates just to make sure that we're comfortable with the underlying assumptions. Some of the estimates that we reviewed during the year is estimate of the allowance for doubtful accounts, estimate of the useful lives of capital assets, just making sure that we're not depreciating buildings over 3 years instead of the typical 40-year of the normal useful life. Of course, the estimate of the OPEB liability, pension costs, those things. We look at all those assumptions, underlying assumptions for those estimates to make sure that we're comfortable with them. One thing I want to talk about is significant accounting policies. That can be found in Note 2 of your financial statement. So all the accounting policies that we follow are in Note 2 of your financial statements, so you can get a briefer of how we account for stuff. Some non-attest services that we do help you with, we help with the federal, our tax specialists help with the federal and state tax returns. We also make sure that we are independent of the organization every year, and we are independent of JWB. Just some other required communications. We encountered no significant difficulties in dealing with management, no disagreements, no outside consultations. We've provided the management representation letter with specific representations for management. There's no fraud or illegal acts. Of course, if there was anything of that nature to communicate, this would be a reiteration for you guys. It would not be the first time that you have heard this. We would have such communications already, but there is no fraud or illegal acts. JWB is not a going concern. There's nothing to discuss there. Just some other matters. We have certain required supplementary information. We do what we call our in relation to opinion, which means that we audit the financial statements and we just make sure that information ties back, that we're comfortable with it in connection with our audit. And of course, we have our annual report, which is our ACFR, so just some information on And of course, we implemented GASB 96 this year, so we don't get a break. So we have some new upcoming standards, so like GASB 101, which is going to be our accounting changes and error corrections. GASB 101, GASB 101 was compensated absences. We have some good podcasts and some memos on our webpage if you're interested in learning a little bit more in depth about what those changes will, how they will impact your financial statements. Any questions? Oh, wrong button. Sorry, guys. I'll go back.
On the accounting or financial reporting changes, do we anticipate, or Laura, do you know, do we anticipate any of those applying to us in this next year?
GASB 101 on compensated absences is a relook at how you book and record accrued vacation and sick time and so forth. And most of the changes, and you can certainly correct me, most of the changes that they're requiring is a relook at how that's being calculated and determined. A lot of it has to do with retired folks. We don't have any of that would apply to us. The way we're recording are now is you take the number of hours that you've got on your books from all your staff for accrued liabilities for vacation and sick time, and then you use the current hourly rate that they're being paid as of 9/30, whatever the year, and you calculate that amount. And then you have to do a good job trying to estimate how much you think of it would be coming through in the next 12 months. And you have information that you could look at. I don't see an impact to us on how we've been calculating our accrued liabilities. The other changes that they're coming through is in the note disclosures and the audit report. So right now, the note disclosure is requiring you to show the difference between your beginning of the year liability, what your addition is, what your expense was, and then your ending liability. And they changed that several years ago because they wanted to see it broken out instead of netted. Well, one of the things that they are proposing in the new standard is you can go back to the net version if you want, which I have to laugh because we had to change it. But that's still optional, however you want to disclose that in your footnotes. So we're probably going to do it the way we've been doing it. But as far as the calculation and any effect to our liability, I don't see any. As far as GASB 100, I don't see any impact for us on that either, or 102. And I don't remember the effective dates for those standards. Do you?
Sure. So 100 and 102 will be effective for next year, so for your
Okay.
2024 financial statements. But
Anything to add on what I said about compensated absences?
not much. We'll definitely work with management and get an understanding of the calculation and compare that and all the assumptions that are utilized in that calculation. We'll go ahead and compare that to the new standard and making sure that any sort of estimate or judgment that you're required to look at in the standard is incorporated within your calculation. But to Laura's point, I don't see any sweeping change to how it's being done currently.
Thanks.
Comments or questions from the board? From the committee? Does anyone in the, I'm sorry.
Do you have more in your presentation? I can
No, ma'am. Just to remind you all that we serve at your pleasure, not just now, not just when we're doing the audit, but at any time, if there are ever any questions or anything that you think that we should be aware of, please let us know.
Does anyone in the committee believe that we need to have a private conversation with our auditors?
Under sunshine.
You can't do that. I keep forgetting that every year.
practice, but
It's done everywhere else except for.
Right.
Okay.
All right.
Good enough. Not in the government.
Right, and so I did strike that from the agenda. The
I
prior
saw
year.
that, but
Yeah.
it's always on my
Well,
mind.
Colleen reminded me that in the sunshine, officially, we can't do that, but we can certainly ask Lauren to comment on how the team did. I'm happy to announce that I've got all my team here with me. Diana from the budget side, Caro, Stacy Gill is the program finance, and Lynn, the accounting manager. And Lynn's unit and team has worked very hard on getting this SBITA run through the financial statements as well as all the information for the ACFR, and we will be submitting for the Certificate of Achievement Award again for this year. Those statements are due by the end of March 31st. So she will be back to the board on March 21st, which is when officially the audit will be approved. Legal will provide an update relative to us at that period of time. There is what they call a representation letter that management will need to sign, basically telling the auditors that we've provided them everything that they've wanted, we're not aware of anything that they should be aware of. So the audit report date will be March 21st, and then it'll give us a week, 10 days, to get all the information together and submit that to the Auditor General. So we are on track to do that, but I would love to hear any comments you have about the accounting team and what a great job they did.
No, they absolutely did a phenomenal job. Anytime we had a question, they made sure we got an answer. Anytime, they're great at not only answering, but making sure that we have the support to validate what they told us. So no, they're fantastic to work with. We didn't have any disagreements regarding how we completed our audit involving accounting treatment or anything like that. So a real pleasure.
Yeah.
So I will say that Dewana made a comment in our exit conference that she said, you're one of my favorite clients to work on.
They are.
I loved hearing that.
Yes, I'll say it again. You guys are
Because
my
there
favorites.
are about 200 items that they ask for that have to be uploaded to the SharePoint. Documents, information, so forth. And so it's a heavy lift, and I'm sure you're all aware of that, but just kudos to Lynn and her team for accomplishing that.
Yeah, they do a great job.
Okay. Do I have a motion to approve?
Motion to approve.
I have a motion and a second. All in favor, say aye. Aye. Those opposed, same sign. I'd like to thank you again for a job well done. I'd like to again congratulate the team for their 4th award as we're continuing in this dynasty that we've now created under Laura. And we appreciate everything that you've accomplished so far. Let's keep it up. Thank you. All right, let's moving then on to the discussions, the monthly financial and investment report for January 2024. Laura, it's
Thank you, and I do want to recognize that we have 2 new Finance Committee members that have joined us today. And so just to kind of give them a little bit of an update on the monthly financial statements. These are provided as consent items in your board packet, but at the Finance Committee meeting, and we only meet 4 times a year, I do take the time to kind of walk through and point out a few things. So we've got January in front of you, and so I'll just take a moment to just highlight a few things. You can read the summary that was included, but in looking at the balance sheet, or what we call the combined balance sheet, I just want to point out the auditors had mentioned the word SBITA, which is S-B-I-T-A. And if you look at our balance sheet, we now have subscription assets, SBITA. And of course, the way the standard is required is, as she mentioned, we now book these as a capital asset and the related liability. But then, of course, you've got to depreciate the asset, and then you've got implicit interest rate, and now you've got a liability. So it's a little more complicated, if that's the right word, but we are now showing that on our balance sheet. And if you look at the total liabilities, the big chunk of that, even though it's $7 million, $6.2 million of that is the pension liability. So it's a smaller amount, which is the SBITA liability, which is now included on the books. And then going further down into the fund balance section where we break out the different categories for unreserved, I just want to point out the unassigned unreserved. So we may have a $50 million fund balance, and some of that is already identified for certain things, meaning we've got a 2-month reserve that we set aside for cash flow purposes for our monthly expenditures. So our true unassigned balance is about $29 million or $30 million. And so that's the piece that isn't, I shouldn't say accounted for, but isn't, taken for. But the others is board policy that you want to have a 2-month reserve for your operating cash flow purposes. On the income statement, or what we call the statement of revenue and expenditures, I also want to point out that we get all of our revenues at the beginning of the year because 99% of our revenues are ad valorem taxes, and of course the county submits that to us early in the year, November, December. So when you look at the financial statements, you can see that our revenues are 86% of budget right now because we've received most of those payments. As far as expenditures, although these financial statements are 4 months into the fiscal year, which would be approximately 33%, when you look at our expenditures to date, we're at about 15%. But I want to remind you that since our programs are on a cost reimbursement basis, this is really only reflecting 3 months of reimbursements that the agencies submit to us. So it's only 3 months, because this is really what we refer to as a modified cash basis, a financial statement. But the good news, I guess, if you want to compare to prior year, so for year-to-date actual program expenditures through the end of January is 16.3 million, and a year ago, same time ago, it was 12.8 million. So we have spent, if that's the right word, an additional $3.5 million from the prior year. So we are working very diligently to get those funds out based on the program finances review of those reimbursement requests and so forth. The other information in your packet is some graphs relative to the revenues, where they were in comparison with the prior year. We are required to report any contracts that are signed that fall between the $25,000 and $75,000 range, and then also any budget transfers that have been approved, and those are identified in the report as well. And then the last page is our investment report. This, again, is a required report that we provide to you. If you recall, and during the last, I believe it was the last fiscal year, we approved and we added a third pool that we could invest our funds in. I felt that it was prudent that we added another pool, because when I came on board, we were only investing in 2 different pools, and our cash flow had gotten so big and we were investing so much. Our total cash under investment is $120 million as of the end of January. Keep in mind, as I said earlier, a lot of it's because we've gotten all of our money from the ad valorem taxes. I did call each one of our pools representatives back in, I don't know, August, September, to remind them that we'll be getting an influx of cash, and we will be adding they would probably be getting around $20 to $30 million additional to invest. So now we have the 3. So we have what's called FLIGIT, which is the Florida Local Government Investment Trust. We have Florida Prime, and then the new one that we have is called FL Class. They are all approved under the statute. They all meet the requirements that we have to invest in. And then you've got a little pie chart that shows the allocation between these. And our earnings to date, and we've had conversations about this as well, we're making a lot of money, which is great. You know, our total interest year to date, let me see here, was $1 million for the first 4 months of the fiscal year. Years ago, and even when I came on board, we budgeted $250,000 for earnings, and now we're budgeting, you know, $2.5 million. That's a great thing to have, but it's additional money that we have to be able to spend. I had mentioned, Beth, that I talked to one of the other children's service agencies, and they don't budget anything for investment income. They consider that as just a extra thing that they don't count on. We think it's prudent to at least calculate some sort of percentage that we think that we can get a rate of return on. The rates of return right now are in the 5% marks, so we've done very well in that respect. So that's the investment report, and I'd be happy to answer any questions or comments on the monthly statements. Mr. McCurry?
Do we have any questions or comments from the committee? Seeing none, thank you again for a great report. Then let's move on to the FY25 budget calendar.
Thank you. So we are required to post on the website the calendar, and Diana's department and group works on this very feverishly. And if you have a colored version of this, you'll see all of the pieces that go into this. The board is involved, finance committee is involved, and obviously internal staff is involved with many steps moving forward. We kick off the budget in January, February, and I know that internally the departments are looking at us like, hey, didn't we just get through with the fiscal year? Why are you already talking to me about budgets? Well, we have to come to you with a budget, and that'll be presented at the April Finance Committee meeting. We'll be beginning to put some assumptions together relative to cost of living, the CPI index, and more importantly, we'll have a better idea as to what the ad valorem or the property tax values will be that the county will share with us. They haven't provided us with any of that information yet, so we didn't feel comfortable bringing any of that to the table today. There was just too many unknowns. But the development calendar just identifies all the pieces that go into it. All the departments have to look at their budgets and provide those back. And there's a lot of work involved with it, and I know the budget department does a great job staying on top of all of those deadlines that we have to meet from a Florida statute requirement. Any questions on the budget?
Seeing none? Thank you so much.
Sure.
We'll now move on to the Chief Executive Officer's report.
Well, the headline for me is that today is Laura Brock's last day at JWB. And we'll have a little get-together right after this meeting to I can't say celebrate that, but celebrate her and her tenure with us. She's been a phenomenal member of the executive team, a wonderful manager and leader, and her technical skills are, extraordinary. The auditors are, probably as sad as anybody is about Laura's choice to finally begin spending more time with her grandkids and doing some of those other things. So just to let you know, kind of, where we go from here. We've negotiated a consulting agreement with Laura. You may or may not remember when she first began working with JWB, she worked as a consultant when our prior CFO left. And we did a search, and I convinced her to throw her name in the hat, and she became our CFO just short of 4 years ago. So she will be consulting with us on specific items, particularly related to audit and accounting questions, and how we may implement those, review of monthly financial statements, if there's anything else relative to the audit, and just doing a last review of that. She will do that with the ACFR, as well as some review and assistance to me relative to the budget. So I'm very grateful for that. That's a real boon for us, that we will have that resource to rely on. And there may be, depending on the skill set of who next sits in the CFO chair, it may well be that there are certain skill sets that Laura has that she continues to be able to provide to us. And she's, it's got to work for both sides. So we'll see how that goes. In the interim, I will serve as acting CFO. So anytime the bylaws reference the CFO or our policies refer to the CFO in terms of decision-making or approval, that will be me in this interim time period. And we have engaged Baker Tilly as a search firm. They've really been on board now just for a couple weeks. They've put together I say brochure, it's an online brochure, but information for potential candidates about the position, about JWB and how wonderful we are, and how wonderful it is to live in Pinellas County. So that's really just been posted to, 15 plus places out there that the potential candidates would be likely to see it. I think they have 7 candidates to date, so we're still at the early end of that. They and others that we interviewed about the process said this is a very tough position to fill, and that's beyond Laura's shoes to fill, but just the position in the marketplace is really difficult to fill. And, they said it could easily be 2 to 5 months before we have somebody in place. So just to sort of set expectations, we will, that's a likely timeline. And that's consistent with everything that Linda and I see and that our auditors see in the marketplace around financial executive positions. Let's see. think that's all I would touch on. Yeah, you got an email, I think, from me, but we are a finalist. JWB is a finalist in the Tampa Bay Business Journal's Best Places to Work in the large employer category. For all the categories, from smallest to extra large, I believe we're the only governmental unit in that. And of course, one has to apply, so many maybe didn't apply, but we were so bold as to apply. And we really did it. Yeah, oh yeah.
I was gonna say,
Who do you think?
it was hand carried to the group.
Yeah, who do you think was, and I will tell you, there are two completely different sort of motivations for us to want to do this and go through the work that it took to apply. For Linda and for me and for the HR folks, we really, it's a very good employee survey with really helpful results that will inform us as to where we're strong and where we have opportunities, and that was our major motivation for doing it. Ms. Teeter's motivation is the more she can have JWB's name out there as wonderful, the better. I don't disagree with that. And so we'll be looking at how we use that designation. In each of those categories, and I don't know, there may be 12 to 15 within our 15 in our category. One will be named at an event on May 1st out of that category as the best. So we are a finalist within those categories. And, then that's a nice thing to throw to our search firm, Baker Tilly, to share with potential candidates for the CFO position, for instance. So that's the second of those kinds of designations we've gotten in the last 2 or 3 months. I was named, because they do this as a CEO thing, as a boss for babies, which is the children's movement, a very, very well-connected and advocacy group relative to children's issues. The children's movement, based in Miami, has this designation for workplaces that are family-friendly. And so for us, that meant not only our personnel policies that are family-friendly, but also the work that we do in the community to promote support of families. So those are nice designations to have and to reflect who we've really always been. But it's nice to have the external confirmation of those things. So that's all I have, unless you all have any questions of me.
Seeing that. Do we have any outside comments or having no cards? Anyone else? Okay. So before I close this meeting, I want to again thank you, Laura, for all the hard work and your diligence to ensuring that we are the best of the best from the financial perspective. And I, for the committee as well as for myself personally, well, I know we'll miss you and really wish that you have a great time with your grandkids, but don't expect to be far from here that often. Judge Moore, do you have anything to say?
Yes, I want to say it's been a privilege and an honor working with you. And thank you for agreeing to at least be a consultant. And as I spoke to you personally, I think grandparents are wonderful. So enjoy your grandkids.
All I have to say is thank you. And congratulations. Thank you.
I appreciate that. Yes, thank you. So as Judge Moore said, grandkids are great, but I do have grandbaby number 5 arriving in April. And so I have 2 in Charlotte right now and 2 here in St. Pete. And, the oldest of my grandchildren is 6. So they're all, they're all little. They're all young. So I'm looking forward to. Somebody asked me, where are you moving? Like, what do you, and I'm like, I'm not moving anywhere. I'm still going to be here. It's just that we want to be able to be a little more flexible. And I do appreciate, Beth has been extremely flexible with me. When I came on with this role, I was very hesitant to come on full-time because of that flexibility. At the time, I think I had 1 grandchild. and she's allowed me to be able to, take trips and be away. But I have a great staff that will take over. I'm very confident in all of their abilities, and I feel like I'm leaving you in a good place. I think each one of my managers have done an outstanding job, and I appreciate that.
Well, I guess it's time to move on to the little bit of a farewell celebration. So I call this meeting to adjourn.